Welcome back, everyone. I'm Jordan Giesige, and this is The Limiting Factor. For this quarterly update, rather than walk you through every detail of Tesla's Q4 earnings call, I'm going to combine information from the Q4 earnings call with little bits and pieces of information that we've picked up over the past few months to give us a strategic view on the 3 terawatt-hour goal that they laid out at Battery Day. Before we begin, a special thanks to my Patreon supporters and YouTube members. This is the support that gives me the freedom to avoid chasing the algorithm and sponsors. As always, the links for support are in the description. First, I think it's worth covering off demand because there's no sense in developing 3 terawatt hours worth of battery cell production if there is no demand for those battery cells. So, how much demand does Tesla have? In the last earnings call, I said that Tesla's demand was basically infinite because there are 2 billion vehicles on the road today, and Tesla is only at a run rate of 2 million vehicles per year. However, I should have provided some caveats and deeper explanation there because a lot of people were concerned when Tesla started lowering prices. There's the number of people who are aware of a thing, the number of people who want a thing, and then there's the number of people who can afford that thing. That is, price matters for demand. It's not infinite demand at any price. As this image from ARK Invest shows, if you lower the price slightly, you can drastically increase the market share. And notice the market share is by revenue. So although you're earning less margin on each vehicle, if you can produce more vehicles, you can increase the total profit, which is what matters. So Tesla lowered prices over the past few months to drastically increase demand. Elon confirmed this in the Q4 earnings call by saying, quote, "The most common question we've been getting from investors is about demand. So I want to put that to rest. Thus far in January, we've seen the strongest orders year to date than ever in our history. We currently are seeing orders at almost twice the rate of production. It's hard to say whether that'll continue twice the rate of production, but the orders are high." End quote. Of course, besides the vehicle demand, Tesla also has demand from energy storage, which will be equal to or larger than the demand for vehicles. That is, demand isn't an issue so long as the price is right. And as per Reuters, Tesla has by far the most pricing power of anyone else on the market. They can cut their prices low enough to put other companies out of business, assuming they can produce enough vehicles over time. With demand out of the way, let's look at supply. The next thing Elon said in the earnings call was, quote, "Our long-term goal is to get well in excess of 1,000 gigawatt hours of cell produced internally and continue to use cell providers. So to be clear, we will continue to use other cell providers. We feel we can scale a lot faster using both suppliers and internally produced cells." End quote. 2 things to note here. First, it's clear that Elon is saying that they can't grow as quickly without the partnerships they've developed with companies like Panasonic, LG, and CATL. More on that in a moment. Second, this comment left a lot of people wondering whether this means that Tesla was calling off the 3 terawatt hours of cells produced in-house by 2030. In my view, and hear me out here before throwing your keyboard at the screen, I don't think it was ever Tesla's plan to produce 3 terawatt hours of cells in-house by 2030, despite the fact that's what they said at Battery Day. I think they meant to say 3 terawatt hours of cells consumed or used per year by 2030. Let's walk through the logic. First, with regards to the 100 gigawatt hours by 2022, directly after Battery Day, I questioned what they meant by that on my channel and in interviews. I used this slide to illustrate the point, which was titled "Huge Variance Potential with 100 gigawatt hours." Did it mean 100 gigawatt hour run rate? Did it include Panasonic cells? Or did it mean 100 gigawatt hours of cells consumed from all sources in 2022, whether that be internal or external? Of course, after several earnings calls that said we should expect large volumes of in-house production by the end of 2022, I became more bullish. However, we now know that Tesla only hit a run rate of 1,000 packs per week at the end of 2022. That's a run rate of 3.5 to 4 gigawatt hours of cells by the end of the year. But going back to the 100 gigawatt hour figure, Tesla did in fact consume 100 gigawatt hours of cells in 2022. They produced 1.369 million vehicles, and the average pack size was probably around 70 kilowatt hours, which is about 95 gigawatt hours of cells for vehicles alone, and the rest of the balance was roughly going to energy storage for around 100 gigawatt hours of cells consumed in 2022. In my view, that means the 3 terawatt hour figure is also probably cells consumed. However, I'm sure there's some people out there that are still assuming it's 3 terawatt hours of cells produced in-house, despite the current speed of the 4680 ramp and how much Tesla is relying on suppliers. Let's put the last nail in the coffin on that. Benchmark Minerals has said that the bull case for lithium carbonate equivalent supply in 2030 is 2.8 million tons. At 1.4 terawatt hours per million tons, that's enough for 4 terawatt hours of battery cells for the entire planet in 2030. That is, the odds that Tesla alone from in-house production is going to be using 3 terawatt hours of lithium supply in 2030 is far-fetched in my opinion. That's because it would mean every other company would have to stop growing this year at 1 terawatt hour and let Tesla take the other 3 terawatt hours of battery material. However, if Tesla works with suppliers like BYD, CATL, Panasonic, and LG Chem, it becomes at least feasible that Tesla could consume 3 terawatt hours of cells in 2030. But that would still mean they're using 75% of the battery raw materials that the planet produces in 2030. The only way I see Tesla hitting the 3 terawatt hours of cells for both in-house and suppliers combined is if Tesla has some serious tricks up their sleeves with the Master Plan Part 3 that Elon's been teasing. That is, assuming some surprises with Tesla's Master Plan Part 3, I could see Tesla producing up to 1.5 terawatt hours of battery cells in-house by 2030, along with 1.5 terawatt hours of cells bought from suppliers, for a total of 3 terawatt hours. But even if they miss, it'll be a huge accomplishment and they'll hit 3 terawatt hours of total cell consumption shortly after 2030. These gaps are filled pretty quickly at a 30 to 50% growth rate. Of course, all of this hinges on Tesla's ability to scale their 4680 production system rapidly between now and 2030. How are things going on that front? With in-house production, Tesla's at a run rate of at least 3.5 gigawatt hours per year, and most of that cell supply is coming from their 10 gigawatt hour production facility in Cato Road in Fremont, California. The Cato Road line is probably still using a wet process on the cathode based on the information from the teardown I did of the 4680 battery cell. What's likely happening there is that Tesla is either producing the wet process cathode in another location and shipping the cells to Cato, or they're buying those cathode rolls from a supplier. Either way, although this workaround makes sense for the pilot line to get some production on the scoreboard, it's not a good long-term solution. The question is, will the new 100 gigawatt hour facilities in Austin, Nevada, and Berlin also use cathode that was produced with a wet process? As Tesla showed at Battery Day, a wet process requires a chemical plant and drying lines, whereas a dry process takes up to 1/10 the space because the drying lines and chemical plant are eliminated. If we look at Tesla's recently released images from the expansion at Giga Nevada, we can see that the part of the building that's expected to produce 100 gigawatt hours of cells is a fraction of the portion of the building that currently produces 35 gigawatt hours of cells. Some of the 35 gigawatt hour area is of course used for making electric motors, but even if that's half the area, it's still 3 times the size of the 100 gigawatt hour area. The only way that I could see such a small footprint happening for the 100 gigawatt area without a wet process is if they're producing the battery cathode rolls off-site and shipping them to Nevada, which would be of course costly and unreliable. So based on the footprint of Tesla's cell factories, it looks like they're dedicated to using a dry process. Unfortunately, there were no major clues in the Q4 earnings call about the dry electrode process specifically, but let's look at what they did say. Zach Kirkhorn said, referring to costs, quote, "The Austin and Berlin ramp inefficiencies in 4680 will make a substantial amount of progress over the course of the year, and that's within Tesla's control." End quote. As the chief financial officer, Zach is typically more conservative. So if he's seeing a positive trajectory from the finance side, that's important and relevant because the 4680 is all about cost reductions. As usual, Elon was super optimistic and confident in the earnings call, saying, quote, "I think Tesla's competitive strength that will be by far the hardest for other companies to replicate is Tesla being just darn good at manufacturing and having the most advanced manufacturing technology in the world. And if you've got that sort of advanced manufacturing toolbox, you can apply it to many things, and we're applying it now to battery cells." End quote. That is, Elon's view is that Tesla is excellent at manufacturing and that when they get the cell manufacturing process down, they'll be the best cell manufacturer in the world. Finally, let's look at Drew Baglino's comments, who's running the 4680 ramp. Drew said, quote, "As far as where we stand in Texas, one of the 4 lines are in production, with the remaining 3 in stages of commissioning and install. Really, our 2023 goal as a 4680 team is to deliver a cost-effective ramp of 4680s well ahead of the Cybertruck. Between those two things, if we achieve those key goals, we'll be set up for a major 4680 year in 2024. End quote. Drew's couched his words very carefully here. That could either be a sign that he's still seeing a lot of challenges or that he's been burned by being overly optimistic in the past. Personally, I think it's a little of both. Earlier, I discussed the over-optimism, so let's look at why Tesla might be seeing continued challenges with 4680 production this year. Each time you increase manufacturing scale, you run into new challenges. My guess is that by moving from the 10 gigawatt-hour pilot line in Cato Road to the 25 gigawatt-hour big boy lines in Austin and Berlin will create new challenges. Not only that, it may be that they're trying to both increase the scale of manufacturing and implement the dry cathode process with new equipment where it may have failed at Cato Road. Of course, on the plus side, the line at Cato Road is only 10 gigawatt hours, whereas the full-scale production lines are 25 gigawatt hours. That may allow for faster production rates earlier in the ramp. And as Drew said, it's not just one line, it'll be 4. That's because they have 1 line in production and the other 3 are being installed and commissioned. That's 100 gigawatt hours, whereas a 4 gigawatt hour run rate at Cato is 40% of the capacity. It's only 4% of the capacity in Austin. That is, there's no way of knowing how the production ramp will go this year. There are both challenges to ramping larger scale production lines and opportunities for bigger gains thanks to the full scale lines. For my part, I'm glad the guidance was more conservative, and that Drew said that 2024 will be the major year. It sets the expectations low for this year and gives them an opportunity to outperform. Drew's comment that they hope to be producing enough battery cells for the Cybertruck well ahead of the ramp is a fairly low bar that they should be able to easily clear. Given that they'll probably produce less than 10,000 Cybertrucks this year, if that, it sounds like they're pretty much already producing enough battery cells with the 1,000 packs per week out of Cato and Austin combined. However, I think the reason Drew said the focus is on producing cells for the Cybertruck is that, and this is pure speculation, the Cybertruck will use the newest version of the 4680 rather than the 4680 cells from Cato Road. Ramping those cells will introduce new challenges. Note that Drew also said that they're targeting a cost-effective ramp of the Cybertruck. I'll talk about that more when we cover the Inflation Reduction Act credits. Beyond the Cybertruck, this is a good time to point out that in the Q4 earnings call, Zach and Elon said that Tesla has plenty of cell supply for this year. Zach said, referring to Tesla's vehicle production target, quote, "Yes, to be clear, the 1.8 million is not cell supply limited," end quote. Elon followed up by saying, quote, "Yes, cell supply is roughly matched with that, and the 1.8 million cars, if we get lucky, it could be more, and then the rest would go into stationary storage, the Powerwall, and Megapack," end quote. That is, they have at least enough battery cells for 1.8 million vehicles. In another point in the earnings call, Elon even commented that they could do up to 2 million vehicles. The difference between 1.8 and 2 million vehicles is about 15 gigawatt hours. So if Tesla has access to 2 million vehicles worth of cells and only uses 1.8 for vehicles, 15 gigawatt hours of cells could be diverted to energy storage. Overall, if Tesla produced 2 million vehicles in 2023 and the 4680 lines continued to struggle, it might look something like this. Tesla needs 45 gigawatt hours of cells to grow by 50% this year and hit their optimistic target of 2 million vehicles. A mediocre expectation from suppliers would be an increase of 36 gigawatt hours or a 40% increase in supply. And a low expectation from Tesla's in-house lines would be 9 gigawatt hours to cover the other 10%. On that note, some people might point out that in the last earnings call video, I showed this image. As I said in that video, this table assumes Tesla continues to scale production at a rate of 33% per month. Although it accurately predicted the run rate of roughly 4 gigawatt hours in December of 2022, it was by no means a forecast, but rather a projection based on their past improvement rate. I would be surprised with the new lines that they're setting up that they could continue at a 33% improvement rate. It's safe to say that would be a hyper-bullish scenario. And as I said in past videos, it would be so many cells that Tesla wouldn't know what to do with them. They simply don't have the vehicle or energy storage production facilities to absorb more than about 30 gigawatt hours of additional battery supply in 2023 beyond the 45 gigawatt hours already expected. It would certainly be a good problem to have, but I don't think it's happening quite yet. When it does, we can expect a flurry of new product announcements and facilities to absorb that cell production. While we're on the topic of cell production capacity, as far as we know, Tesla has about 300 gigawatt hours of cell production capacity either planned or currently under construction. 100 gigawatt hours in Austin, where one line is in production and the other 3 are being commissioned, the 100 gigawatt hours that Tesla has planned for the Berlin building, and the 100 gigawatt hours planned for Nevada. Generally, from the time cell production capacity comes online, it takes at least a year to hit decent volume compared to the nameplate capacity, and that's with a well-established process. Of course, building construction can take over 6 months and the equipment installation can take over 6 months. So usually 2 years is expected to get a cell factory off the ground. That means if the production ramps go well, we're probably looking at least a year from now before Austin hits good volume. 2024 for Berlin if the equipment is installed this year in the existing building, and maybe 2025 for Giga Nevada. Bear that in mind when Elon says there are plans at some of these sites for between 200 to 500 gigawatt hours. That's probably looking past 2025. Before we move on, I do want to congratulate the team at Tesla for what they're achieving here. Tesla took on an enormous challenge with the 4680 production system. Not only are they a new manufacturer, they're trying to leapfrog the manufacturing capabilities of every other cell producer in the world in terms of production cost and speed of scaling. I don't think they'll ever pass the total scale of a company like CATL because CATL is also excellent at scaling. But if they get the 4680 production system right, there's a chance they could be one of the top 3 cell producers in the world within a decade. Regardless, any cell production is going to be a boon to Tesla because of the tax credits in the Inflation Reduction Act. As Elon said in the Q4 earnings call, quote, "Long-term, we expect the value of these tax credits to be very significant. You can do the math. If we were to get anywhere near 1,000 gigawatt hours of production, or even a few hundred gigawatt hours, it's very significant. But the credits do rely on domestic manufacturing. And in the case of Panasonic domestic manufacturing, we're splitting the value of the credits. So the value of the credits this year will not be gigantic, but I think it could be gigantic. We think it will probably be very significant in the future." End quote. Zach followed up by saying, quote, "We think on the order of 150 to 250 million per quarter this year and growing over the course of the year as our volumes grow." End quote. How did he calculate that? First, as Elon said, Tesla and Panasonic will split the tax credits from Giga Nevada. The Inflation Reduction Act credit is $35 per kilowatt hour for cells produced in the U.S. and $10 for battery packs. That's a total of $45 per kilowatt hour, or $45 million per gigawatt hour. $45 million per gigawatt hour times the 35 gigawatt hours produced at Giga Nevada by Panasonic is $1.575 billion per year. Divide that by 2 for the split between Tesla and Panasonic, and by 4 quarters per year, and it's $197 million per quarter. With that in mind, Zach's low number of $150 million per quarter doesn't make sense. Tesla's producing 1 gigawatt-hour of battery packs per quarter currently, which is $45 million per quarter. Plus, my understanding is that Tesla could be eligible for about $10 per kilowatt hour for their Megapacks and Powerwalls, or $10 million per gigawatt hour. If they're eligible at their current rate of 2.5 gigawatt hours per quarter, that's $25 million per quarter. That is, the $197 million per quarter from the Panasonic cells, plus the roughly $45 million for 4680s and the $25 million for energy storage production, should mean about $270 million per quarter and growing, rather than the $150 to $250 million Zach suggested in the earnings call. What's happening here? Either Zach was speaking off the cuff, or there's stipulations that prevent access to the full credits, or Tesla and Panasonic's split for the tax credits isn't equal, and they're being split something like 75-25 or more in favor of Panasonic. This would explain why Zach's low number is $150 million per quarter. At a split of 75-25 or more in favor of Panasonic, that would give Tesla at most $98 million in tax credits from Panasonic. After adding in the 4680 and energy storage production, the total would be about $170 million. Obviously, this is speculation on my part. Let me know what you think in the comments below. Either way, it's a good chunk of money and it'll grow rapidly. In time, for each of Tesla's 100 gigawatt-hour production facilities, they'll be making $4.5 billion per year. That brings us to a loose thread from earlier in the video about the impact of the Inflation Reduction Act tax credits for the Cybertruck. Drew said that their goal was to make the ramp of the Cybertruck cost-effective. I'm assuming that means without the Inflation Reduction Act tax credits, and they want to make sure their 4680 cells are cost-competitive without incentives. Why? The $45 per kilowatt-hour tax credit should pay for the 4680 production lines and then some. For example, the Giga Nevada expansion is about $3.6 billion. It includes both 100 gigawatt-hours of cell production and 50,000 units of semi-production. Usually, a vehicle production line costs at least $1 billion, and I'm assuming that applies to the semi-production line. So, if we back out the cost of the semi-production line, that leaves $2.6 billion for 100 gigawatt hours of production, which is $26 per kilowatt hour of installed capacity. If the tax credit is $45 per kilowatt hour, within a year or two, the tax credits will completely pay off the factory, and then after, Tesla will continue to get $4.5 billion of tax credits every year. For reference, Tesla's net profit is currently $3.7 billion per quarter. What's going to happen when they have multiple 100 gigawatt-hour 4680 factories with the potential of $4.5 billion of tax credits per quarter? I honestly don't know here because I don't know all the stipulations around those tax credits and what the odds are that lawmakers roll them back after they realize how much money they're giving Tesla. As Elon said, the impact looks to be gigantic. So to wrap things up on the topic, even at a low volume of battery cells, the ramp for the 4680s for the Cybertruck should easily be cost-effective. But I know the engineers at Tesla wouldn't be satisfied leaning on the tax credits. They want to build a super cost-effective and world-beating battery line without the tax credits. Finally, let's move on to some odds and ends points from the earnings call. First, Zach Kirkhorn said, quote, "On the raw materials and inflation side, where lithium is the large driver there, we'll have to see where lithium prices go. And we're not fully exposed to lithium prices, but I think in general, as what we've seen from our forecast here, cost per car of lithium in 2023 will be higher than 2022. So that's a headwind." End quote. The image on screen shows just how much the raw materials prices have increased for batteries in 2022, and as Zach said, they're supposed to be even higher this year. However, as Zach also said, they're not fully exposed to these raw material prices. That's because they have contracts that are only partially indexed against the open market cost. With that said, there's also typically a lag between those indexed cost increases and what we see in their contract price. So I'm not surprised they're really starting to feel the increased cost of lithium. The open market price went up by over 10-fold last year. Next, Alex Potter of Piper Sandler asked, quote, "On the incremental capacity in Nevada, the 4680s that you're planning, it's a lot of batteries, and presumably you won't be putting all of those in a Tesla Semi. Is it correct to assume that all of those 4680s are going to be usable in your entire range of products? And if the answer is yes, then if you had to guess, how do you think that 100 gigawatt hours would be allocated between your various end markets?" End quote. Elon responded, quote, "I don't know. This is a bit too much guessing at this point." End quote. And then Drew said to Alex Potter, quote, "You're right. Not all of the 100 gigawatt hours are going into the semi-trucks. That is correct." End quote. Finally, to wrap things up, Elon said, quote, "I alluded to a number of future products. Those future products would use the 4680. End quote. As I said earlier, it'll probably be until 2025 that we see volume production in Giga Nevada, so I'm not surprised that they don't know where all those cells are going. It's obvious that about 50 gigawatt hours of cells will be used for semi-production in Nevada, because each semi will use about a megawatt hour of cells at 50,000 units per year. But that will still leave about 50 gigawatt hours. If we're thinking in terms of potential new vehicles, that would be enough for about 500,000 cyber vans per year, or over 1 million light-duty vehicles like a robotaxi or compact Tesla. At this point, it's too early to speculate. For now, I'm just going to remain patient until the 1st of March, when we should know a lot more about what Tesla has planned for new products, and so I won't get into that in this video. I suspect that event will mostly be about the ways that Tesla will simplify vehicle manufacturing, Tesla's Master Plan Part 3, the Cybertruck production line, and possibly a presentation teasing new tech to simplify manufacturing. For example, stripping most of the wiring out of the vehicle, moving to a high-voltage architecture on both the high-voltage and low-voltage systems, or even electric brakes that remove the need for a master cylinder and hydraulic lines. I think that last one is a bit premature, but I do expect to see something like that in the next few years. The next odds and ends point is a comment by Elon. Elon said, quote, "And we've got an amazing plan for making the 4680 cell low cost and high energy density." End quote. Personally, I want to know more about how the production ramp of the 4680 is going, rather than more teases about the potential energy density. With that said, I hope that for the Cybertruck they can at least increase the energy density of the 4680 cell and pack to match the pack level energy density they're currently getting out of their other high nickel battery packs. Otherwise, we may not see the long-range version of the Cybertruck for a couple of years until they improve the energy density. Finally, as an interesting bit of speculation, one thing that interests me is why Tesla is expanding in the middle of the desert at Giga Nevada rather than someplace else. Nevada's rich in lithium, and it would be ideal for Tesla to have a mine near the factory. Although, if that mine does happen, it would probably be after 2025, because it takes years to get a lithium mine and hydroxide refinery up and running. But it would fulfill Elon's dream of building a battery cell factory directly over a lithium mine. The odds are low, but it's an exciting possibility. On that note, this is one more thing that I hope we hear about in Tesla's Master Plan Part 3. What happened to the salt plus clay lithium production process? If you'd like to know more about that, check out my video on the topic. In summary, the 3 terawatt-hour goal that Tesla teased at Battery Day was definitely a stretch goal. The current base case forecast for battery raw materials is that all manufacturers combined will only have access to about 3 terawatt-hours of materials in 2030, and the bull case is 4 terawatt-hours. The only way that'll change is if Tesla is lining up the most ambitious materials plan in history with their Master Plan Part 3, and we're still waiting on that. Regardless, even with Master Plan Part 3, Tesla is still going to use outside suppliers, and it'll take them time to ramp their 4680 factories. That is, in my view, based on what we know so far, not only is Tesla's 3 terawatt-hour goal a stretch for in-house production, it's also a stretch for the entire industry, including Tesla, to supply Tesla that many battery cells. As for 4680 production, the 4680 factories are ramping slowly. There will be a helpful amount of 4680 production this year, but it's going to take a few years to fill out the 300 gigawatt hours of capacity that they're planning, installing, and commissioning. But given that Tesla is currently only using battery cells at a rate of about 100 gigawatt hours per year, they wouldn't be able to use 300 gigawatt hours of cells in the next couple of years anyways. That is, unless Tesla unveils multiple new products and facilities over the next year. I'm looking forward to the Investor Day coming up in a couple of weeks to put some meat on the bones in terms of both new products and the raw material supply to feed their ambitious plans for 3 terawatt hours by 2030. Overall, whether they hit 3 terawatt hours of in-house production or a mix of in-house and supplier cells, the most important thing is Tesla's ability to turn a profit on their products, and that doesn't seem to be under any threat anytime in the near future. With that said, massive in-house production of 4680 cells would secure Tesla's market dominance through reduced costs in the deep future. It would also allow Tesla to scale more quickly. So hopefully, investors will ask more detailed questions at the next earnings call now that demand concerns have been addressed. A special thanks to my YouTube members and all the other patrons listed in the credits. I appreciate all of your support, and thanks for tuning in. If you enjoyed this video, please consider supporting me on Patreon with the link at the end of the video or as a YouTube member. You can find the details in the description.